If you watched yesterday's video and were patient until today, or watched the past several videos, you're being rewarded on days like today. And I think today's Fed Speak highlights why that's the case. We had Powell talk quite hawkishly, say that we could go beyond neutral if we have to, and that getting inflation down is certainly the Fed's top priority. But the market didn't really have much more than a 5-minute spill. So why is that the case? There's a couple reasons why this is the case, and we'll start with the first reason, which we've discussed and cited several times over the last several weeks, and has been a very large pillar of why we thought we were making some sort of bottom in previous videos. And this pillar is what Bullard has said about the current condition of the bond market. Bullard, let's not forget, is the most hawkish member of the Fed. And he has said as late, I guess you would say, or as early as 2, 3, 4 weeks ago, that the bond market was already pricing in everything the Fed was going to do. He reiterated that today. So why is that determinative? And why is the title of this video, Fed Speak, determinative, or Determinative Fed Speak? Well, everyone's worried about the Fed tightening and hiking rates. Key word there is everyone. Everyone is aware of what the Fed is going to do. And there has been a massive correction, a massive re-rating of assets across the spectrum. We've seen the largest sell-off in the bond market in decades. Get that through your head. But sentiment hasn't gotten there, and there's this little bit of a mismatch because people are saying, oh, the Fed is going to tighten. So I need to get out now because the Fed is going to tighten. Well, one thing the Fed has done very well is communicate effectively. We have not really been surprised by anything the Fed has actually done. Yes, they had a hawkish pivot in November. Since then, we have basically not been surprised, except for the 75 basis points coming off the table. But guess what? We're probably not going to get 75 basis points. So that was just a total market puke, and it didn't make sense. And what made sense to me, actually, was the fact that the market rallied on that message because the Fed communicates well, and they were just communicating well. That's not what they were looking to do. They hadn't done 50 basis points in a long time. They weren't going to get above 50. Now, they're saying if the economy, does differently or stays hot and inflation continues to rise, they will be a little bit more hawkish. I think there are signs the economy is not going to get even hotter, but that it's just going to stay strong, that inflation is peaking, and that the Fed is going to stay the course and everything is going to go as expected. And the aggressive bearishness we're seeing now is providing opportunity. And I think we have to lean into that and just be calm and focus on the fundamentals. And I think if we do that, there are plenty of opportunities out there. So this is not a time to day trade. This is not a time to worry about tomorrow. This is a time to be focused on, month to month, quarter to quarter, calm, complacent investing, value investing. This is not an opportunity to trade. I tried that. It's not fun. Don't trade. Invest. Don't try to call bottoms. Don't try to call tops. But notice, when things are very cheap, you gotta lean in. You gotta be the one when the sellers are outweighing the buyers to take advantage of that. That's the whole concept of Warren Buffett's college professor, Benjamin Graham's book. Something, I don't remember the whole title. It's like investing or something like that. You know what I'm talking about. The Benjamin Graham book. Benjamin Graham talks about the notion of Mr. Market making deals. And when Mr. Market is being dumb and offering you a good deal, you don't not take it. You don't not take it because you're afraid. If you know the deal is bad for him and good for you, you take the deal. And you just be patient. And you have an iron stomach and you have a vision on where things are going to go, and you stick to that. You make that plan, you look at those fundamentals, and you just hold out. You don't worry about what's going to happen 30 seconds from now. That's how you lose. So let's be calm. Let's acknowledge that the market not puking means that the market knows what the Fed's going to do. The Fed has been telling us. It's clear as day. And for the past several weeks, it wasn't so clear. People were getting caught. They were freaking out. They were dumping, wanting to get ahead of the Fed because it's going to tighten. Well, several weeks ago, Bullard told us that the market was pricing in what the Fed was going to do. So when the market continued to sell off, that was a buying opportunity. And it's still below those levels, just saying. But they're reiterating it again today, that the market is pricing in what the Fed's going to do. Bond yields have stabilized. We've talked about that. I think things are okay. I'm just going to hold on through. I'm not doing any more short-term stuff. I'm doing more long-term stuff, and I'm okay with that. So we'll see what happens. That's today's video. Until next time, peace out.